Hi students, welcome to PG Pathshala, an MHRD gateway to PG courses. Myself Dr. Shivaram Rao, Assistant Library and Office on Special Duty, Research and Projects at Central University of Kerala, Kasaragod. We will be discussing a topic called Sources of Finance and Budgeting Techniques, which is a part of a paper called Special and Research Libraries. So the synopsis of this lecture is like this. First, we will briefly see what exactly the sources of finance, introduction, definition, and principles of finance management. Then sources of finance, financial estimation, library expenditure, budgeting process, and summary. Financial management. One cannot imagine a state-of-the-art library without a strong financial support. What we want as a users or a client of a particular library, we want beautiful buildings, we want very good services, we want very good state-of-the-art infrastructure, we want very good rich collection, we want value-added services. How can we provide such demands from the users? How we can satisfy users' requirements? Finance is like a lifeblood of any such organization or even in the library perspective too. So we cannot never imagine the state-of-the-art library facilities without a strong financial support. Library is invariably a part of a wider organization. So it cannot be independent, it is always part of a organization, a kind of division you can say. Its budget therefore is negotiated with its parent organizations. So it is linked to the parent organization's goals and objectives. In general, libraries are not revenue earning institutions. Financial management is not just managing cash. We should remember that it is not just managing cash or providing funds. It is the study of the principles and the practices involved in the financial operations of an institution, industry, or state. As per Weston and Brigham, financial management is defined as an area of financial decision making, harmonizing individual motives and enterprise goals. So what are some of the basic components of financial management? Planning, forecasting of receipts and disbursements, realization of funds and revenues, allocation of funds, utilization of funds, financial accounting, financial control, and financial auditing. Now we will discuss the principles attached to this financial management in brief. Effective control. The control is necessary for the economical use and channelization of resources so that there is a little wastage and the limited financial resources can be put to maximum use. So day by day we are hearing this word that there is a budget cuts, there is a cost cut downs. It is not only just libraries. If you take any of these setups or organizations level, there are various drives they carry out, how to cut down the cost, how to cut down the waste. So the same principle is also applicable in libraries, especially special and research libraries, because it is again based on who supports such kind of libraries, whether it is a privately attached or it is a publicly funded. It should be simple and easy. Financial management should be easy and simple. Procedures for financial management should be kept in simple and easy to operate. Regularity and foresight. Financial management programs should have a typical timetable so as to acquaint everybody with that what he or she is expected to do at a particular point of time. So this is called a proper plan of financial management. So we can call it as a principles of financial management. Next is overall economy. What is this overall economy? We have to take precautions to avoid unnecessary expenditure and wasteful use of scarce finances. So it's kind of judicious use of resources and finance and balancing act. Flexible. Financial management should keep in mind that virtues of elasticity, that word is very important, elasticity, so as to learn scope for adjustment according to circumstances. So we cannot plan each and everything at 100% level. There are unforeseen things which come into effect or come into picture when we plan or in the course of action. So only then can be successful in times of emergency and crisis. But this flexibility should be within the framework of financial rules and procedures. This type of adjustment usually done at the fag end of the financial year when unutilized funds are available in other items. In addition to these principles, there are mandatory statutory financial rules and procedures laid down by the executive authorities or the governments that has to be followed in the financial management. Nonetheless, library and information centers are service-oriented and not-for-profit organizations. Financial management in such organizations like libraries and information centers is more complex and compared to the business setups and important than in profit-oriented organizations. Some of the characteristics of service-oriented not-for-profit organizations like labor-intensive organizations will not have any inventory of services, and the intangible resources. For example, intangibles we can't quantify. Quality of service cannot be inspected and measured in advance, that is before rendering the service. So library is one of the such example where we provide different types of value-added services to its users. Negligible profit measures. So there is no one-to-one measurement. So no direct relationship between the cost and benefits. Hence, libraries' performance is largely rely on non-monetary measures like result measures, process measures, social indicators, inputs as a proxy, output measures. These are some of the performance indicators of non-monetary measures for performance. Now we will discuss in brief what are the sources of finance, from where the finance comes, from where we generate these funds. In general, libraries depend heavily on a continuous supply of funds for organizing their activities or programs and services. Take for example, you want to automate your housekeeping operations in a library. We require funds. Consider you are going to acquire e-books for your library, packages of e-books. Again, you require funds. Consider you are going to introduce some new services like indexing and abstracting services or providing a better portal-based research services. You have to create portals. You require infrastructure, IT, hardware, softwares, manpower. So there are a lot of requirements. A continuous supply of fund is must to meet these kind of requirements, or if you have to improve, or we have to provide, if you want to provide value-added services. With the increasing costs of books and journal subscriptions, it would be impossible to plan a collection development program consistent with the needs of users without an ensured supply of funds. So the fund is the financial support is must. Financial requirement is either long-term, so generally we call such a long-term planning as a fixed capital requirements or non-recurring expenditure, or it should be short-term, that is working capital or recurring requirement. Different types of libraries receive funds from different sources. For example, if you see academic libraries, they have different funding agencies. Take public libraries, there are the public funding agencies, maybe the ministries are different. Again, the taxpayers' money is given to these kind of public institutions and how they are funded. Though some sources are common, such as government grants. If you take special and research libraries, if they are public institutes or part of public organizations, the larger chunk of fund comes from the public or the government grants. Grants from parent body, that is again public fund raised through taxes. Special grants from other departments like institutions, like again funded by public fund. Grants from endowments and charitable institutions. And in addition to these, funds can also be generated, but maybe the quantity is very negligible, like through membership fees, through subscriptions, to sale of services and miscellaneous revenues earned by the library, like non-recurring and meant for specific purposes with restrictions on allocation and use. Fines and miscellaneous sources again are also part of this sources of funds. Sometimes, like library can publish certain documents and the publication costs can be part of your source of funds. Some libraries share their photocopy services and translation services, special services like selective dissemination of information or current awareness, even document delivery services. These are some of the miscellaneous sources which helps in sourcing the funds for libraries. In India, majority of special and research libraries are attached to government departments and research institutes in the field of agriculture, medicine, judiciary, museums, national archives, more recently economic, social and industrial development agencies. Special libraries which come under various ministries such as agriculture, health, commerce and industry usually provide a free service to a restricted government clientele and are seldom open to the public. The newer research institutes serving industry, while financed mainly by governments, often do charge subscription fees and service fees for their specialized services. So this is a broader perspective and view of Indian scene with respect to sources of funds. Of late, special libraries have been seriously considering the ways and means of generating part of their own resources. So there is a lot of pressure from the parent body or the organization level that how to cut down the waste, how to cut down the costs, and how to generate revenue internally, and how to provide value-added services, and thus make that unit as a cost unit. It has become increasingly necessary for libraries to seek alternative sources of revenue to support its activities that were once thought to be the responsibility of tax dollars. Causes of this trend include the rapid growth of information, increased costs for services and materials, and demands for additional services. There are n number of factors which impact or which affects why this is happening. Many libraries today feel pressed to spend more time and energy making contacts and writing grant proposals in order to raise needed funds. So this is another way of balancing this and getting funds and finding out the sources for funding to run the services. Now, what is financial estimation? Any business plan must prepare a financial estimation and is necessary for decision making and activity projection. For example, in case of libraries, financial estimates may depend upon the collection development policy of that particular system, or the number of users they are having, or the jurisdiction, and other factors are deciding factors for financial estimations. Hence, libraries can consider following parameters for financial estimations. What are those? User population and its composition, materials to be acquired, it may be a different multimedia, nature and type of information sources, you can classify in different ways, services to be provided vis-a-vis objectives of the parent organization, hardware and software requirements in case of it is a IT driven, if automated activities are part of that library, Unsatisfied service pressures, if any, are the most frequently used factors in determining the financial needs of a library. Established national and international standards for quality in services, often expressed as minima of materials, personnel and operational funds for a given size of the library. So these are some of the factors which are part of financial estimations. The last one is increase in prices of reading materials and inflation is also another indicator for effective financial estimation. The generally used methods for financial estimations are per capita method. In this method, a minimum amount per head is fixed, which is considered essential for providing standard library services. Common factors that determine per capita library finance includes educational and cultural standards of a community, the expectations and the future needs, the per capita income of the society, the average cost of published reading material, and the salary levels of the library staff. So this is what the per capita method requires, these common indicators or factors to calculate their per capita library finance. The second method is proportional method. This method presupposes that the authorities provide adequate finances to the library out of their regular budget, and that is a particular minimum limit is fixed in that case. A generally used measure of adequate support is the percentage of the institutional budget which is allocated for library purposes. For example, if you see in a global level, the special and research libraries, as per literature, it says the percentage of budget which they give it to such kind of libraries as a part of their organizational budget ranges from 0.5 to 5%. However, there are criticism that the proportional method is likely to lead to a high disparity in case of special libraries, as the budgets of high technology and capital intensive organizations are much larger than the budgets of pure research and social science and humanity institutions. So this is one of the limitations, or you can say, with regard to the proportional method. The next method is a method of details. According to this method, all items of expenditure of a library are accounted for while preparing the financial estimates. There are two types. One is recurring, that is the current expenditure, and the other one is non-recurring, or we can say capital expenditure. For example, the library building is a capital expenditure. Hence, special and research libraries can follow a suitable combinations of above methods for financial estimations, like methods of details. Library expenditure. As consumption is the end of all economic activities, so also library expenditure is the end of all the financial activities of a library. Libraries spend money on books, periodicals, reader services, reference and bibliographical services, documentation and information services, etc., etc. Library is the only agency which can acquire, process and make available all forms of literature to readers. It is not possible to each and every user to buy all these documents or this type of literature and subscribe. Hence, library is a centralized place. Library is a centralized area, place where it supports the organization's activities, its research activities, its academic needs. Hence, libraries spend large chunk of money in providing these kind of services and products. Major characteristics in the nature of library expenditure is, library is a spending institution. Libraries, unlike many government departments, are not revenue fetching agencies. They are spending institutions, and their participation in nation building activities. The money spent by the library is a long-term investment in human capital. Library is a growing organism. If you see the 5 fundamental laws of library science, the last law says library is a growing organism. When we say it is a growing organism, it is organic. So we have both external growth as well as internal growth. What is external growth? In the initial level, we will have the construction of building and building different sections will be a external growth. So after some time, we will start the external growth will stop and the internal growth will start. That is nothing but we are building the collection, we are building the resources inside the library. So hence it is a growing organism. There is a growth. The library is a trinity of three things, that is documents, readers and staff. They always grow. It implies that requirements of the library will always go on increasing day by day. All this means there will be more expenditure. So library is a spending institution. Library expenditure is recurring. Libraries are not only spending and growing institutions, they are also permanent bodies. In an era of educational advancement, library services will have to maintain a continuous rhythm to cope up with the academic requirements of the clientele. In research libraries, it may be research activities. This means that library expenditure is recurring in nature. Now, what are some of the principles of library expenditures? Principle of maximum aggregate benefit. The library exists for the service of different types of readers. Therefore, as a librarian, you should be neutral and should see that no particular individual is specially benefited by your expenditure policy. You should plan your library expenditure in such a manner that the majority of readers derive maximum benefit of a library use. Principles of advanced planning. This is also a principle of library expenditure. Library expenditure should be planned in advance and a proper estimate should be made for different items so that adequate and balanced revenue may be allotted to different heads. Orders should be placed in advance so that the needed materials are acquired in time. The librarian should avoid last minute purchases. This is very important. Well planned collection development policy, well planned purchases are must for effective utilization of funds. Principle of equitable allocation. Library funds should be equitably allocated for spending on different types of reading material covering various subjects areas. For example, books on science and technology are costlier than language books. Costly reference books become out of date faster in some of the subject areas. However, in special and research libraries, their principle may be applicable as most document has to be spent in reference and periodical literature. Normally, 70% of the publication grant is allowed for periodicals if you take the specialized libraries. All such factors are to be taken into account while spending money for library use. Principle of economy. It means that you should not spend more than the necessary amount on any item, and the expenditure should not exceed your sanctioned grant. Duplication should be avoided because the extra amount thus saved could be better spent on purchasing new alternative titles covering additional subject areas. Let us see library budget. Budget is a powerful management and public relation tool and essential for explaining goals, objectives and its role in an organization. So how you will justify your parent organization's goals, objectives? That is based on your requirement. What are your plans and how you justify the expenditure, how you plan your budget is very important. Librarians have always been faced with the need to demonstrate the value of the services and information products for which they budget. We have to justify our expenditure when we go for new services or new products. A budget is a word derived from the French word called baguette. It's nothing but a purse. It's a quantified financial plan for a forthcoming accounting period with a plan of action matched by resources required to implement the plan. The budget is the financial plan for how an organization will receive and spend money for a set of time period. We generally call it as a physical period. As a common organizational element, special library budgets emerge from the goals and objectives of the special library and directly support the mission statement, goals and objectives of the parent organizations. Budget classification has various versions, such as based on how money is spent, who prepares and allocates, and based on time or by any such purpose identified as a category. Typically, budgets are prepared for one fiscal year. However, there may be a part of long-term budget planning cycles also. We sometimes call such budgets as a planned budget. In general, special and research libraries may employ any one of the following 6 types of budgets, like lump sum budget, formula budget, line item budget, program budget, performance or function budget, or even zero-based budgeting technique in their budgeting activity. We will see some of the approaches to budget. Lump sum budget, it is one of the simplest method of budgeting. It involves the allocation by the library's parent organization, top level management, of a lump sum of budget resources to the library. In this case, the library is given a sum of money and told to function on that amount of money for a period of time. In modern times, the public funded agencies hardly use such lump sum budgets. Small scale contracts could be based on lump sums in some cases, where detailing each of these items could be time consuming and more costly. Next is the formula budget. Lump sum budget involves the allocation by the library's parent organization's top level management of a lump sum amount to the resources of the library. But when a library is funded through the formula budget, the budget allocation is typically tied to a numeric value, such as full-time equivalencies, for example. That is, number of FTEs, registered users, and multiplied by a fixed currency amount yields the library's budget. In this method also has a weakness. Primarily, the budget total is calculated at a later point in time and intrudes on advanced planning, especially for purchase and staffing increases within the library. Other limitations of formula budget is formula budget lacks identification with the parent organizational goals and objectives. Unpredictability, since the formula is based on variables outside the influence or control of the special or research library. Now, line item budget is a very traditional budgeting mechanism, because we have discussed that line item is a very basic level budgeting technique. The line item budget is in contrast to lump sum budget in giving control over each spending item. The budget outlines the items on which money will be spent, but may not necessarily provide information on what exactly will be done. That is one of the challenges, or you can say restriction on line item budget. For example, each line item is given the same weight or importance, even though some are more complex. So there is no altering or the comparison of those items, because there are line of items and we simply go on assigning this much of a kind of budget portions to those items. Generally, a line item budget has categories such as personnel, equipment, maintenance. You can have n number of items like that. So hence it is called a line item budget. Some of the advantages of line item budget are easy to prepare and project. Each unit is detailed for both planning and cost control purposes and helps in comparing performance from one fiscal period to another fiscal period, because we can easily check the line item of last year and the current year, and we can have a comparison. Continuity is thus provided, and the new budget can be constructed from the previous year's document by listing the same line items and by varying amounts to the spent depending upon the recent experiences. So this is one of the two advantages of line item budget. So this is a typical table which you can see or use in preparing a line item budget. At one column you will have all the line items, then you will have last year's spending, and you will have current year and next year's also you can project. Next, program and performance budget. It has two components. One is program budget, another one is a performance budget. Program budgeting and performance budgeting seem to be interchangeably terms, depending on which authority one who cites. Performance budget classifies expenditure by administrative units, by functions, and by items. It includes outputs as well as inputs to you take activity of that particular organization. Administrative skills are emphasized for program and performance budget. Activities are given preference over item purchases. Management responsibilities centralized in program performance budget. It involves formulation and adoption of a plan of activities and programs for a time period, funding, that is relating program cost and performance to resources, execution, that is achievement of the plan within the time frame. Program budget, although somewhat similar to performance budget, however, it is different in considering the purpose, that is the program. We are dealing with the program as a unit, rather considering the separate administrative units. Thus, program budgets may overlap certain administrative units compared to performance budget. A program budget, sometimes called as a cost center or product budget. Cost center is nothing but if in an organization there are 10 departments and library is one such department, then we can call it as a library is a cost center, or any other instrumentation center of that organization is a cost center. So that is called cost center. This is further broken down into particular programs or project areas of service, such as if you take library, we can have reference, we can have circulation, we can have a collection development, we can have different types of programs like that. Then we will discuss planning, programming, budgeting system. It's called PPBS. It is an advanced revised version of program budget. This is more towards evaluation of performance of a program. It emphasizes on the determination of the purpose of a library or other institution, a clarification of its objectives, in the development of programs to carry out the objectives. In PPBS, there is a greater emphasis on measures of a program effectiveness and the opportunity for decision making based on the extent to which programs are meeting the objectives. PPBS involves 4 stages of budget making. First stage, planning, where programs goals are defined. Then we have programming, where different alternatives of achieving the goal are identified. Third, evaluate, where the cost and benefits of the various alternatives are evaluated. And the fourth one, implementation, where the best alternatives are adopted for implementation. So these are 4 steps involved in PPBS budget making. This is a type of highly rational budget. Now we will discuss zero budgeting system or zero based budget. The concept of zero based budget is that existing programs and activities should not automatically be funded, but rather should have to justify their continuation as part of the annual budget cycle. Each program in this case or project is thus vulnerable to zero funding. It is very simple. Let us take today, in this year you had introduced 2 important activities or earlier information services from your library for your users, and you will see whether we have to fund this service next year for budgeting purpose, whether we require fund, whether which it has to be included for the funding, that is based on the performance and the proper justification by the library people. Zero budgeting based budgeting is a planning and budgeting process that involves decision making at all levels of management, starting with the zero base for budgeting and justifying the entire budget request in detail. It requires that all programs and operations at all levels be identified in decision packages, and it should be evaluated and ranked in a priority order. So this is one of the best way to explain and justify the existing services and when we request for the financial assistance. Broad steps involved in for a zero-based budgeting blueprint are elucidation of organizational goals and objectives, examining status of the existing structures, functions and activities, identifying decision units, normally subdivisions of an organization are these decision units, preparing decision packages, review of decision packages and ranking them according to their priorities, and preparing overall budget. Zero-based budget has been viewed as better management, greater efficiency and justifiable use of financial resources. So this is a kind of advantage compared to previous budgeting techniques. The downside of zero-based budgeting relates to its complexity, time-consuming nature, and its success is in how best top-level management or governing body supports. You may provide your justification saying these are the calculations, that's why we want to fund, that's why we want to continue these services for next 5 years or 1 year or 2 years, but how you convince the top level and their decisions lies on them. Starting at zero implies that all aspects of library's operation will undergo examination and justification. That's why it is called a zero-based budgeting system. Most special libraries indicate that zero budgeting also intrudes on day-to-day operational activities such as journal subscription renewals, standing orders, etc. etc. Budget process. Preparing annual budget helps in understanding our goals. It gives us the real picture of developmental areas, encourages effective ways of dealing with money issues, fills the need for required information for top management and to avoid surprises and maintains physical control. Typically, budgets are prepared as we discussed earlier for one financial year, but it may prolong like long-term planning budgets. The library head or the librarian who is in charge of that particular section shall maintain a well-planned financial management calendar and communicate this to top-level management as a part of their budget process. Library manager presenting the budget must be in brief, to the point, informed and well addressed, because ultimately the decision will be taken by the top-level management of your parent organizations. Organizational communication standards have budget presentation formats to submit the budget proposal to review panel. From top level, you will get the information that please submit this kind of information before proceeding to allocating budget. So you have to include all your portfolios and justify the portfolios, existing portfolios, include the new portfolios or the services which you wanted to introduce or to curtail or to further taken forward, and send such details to the top level management. So with this, we will conclude. So the budget systems described so far has differing levels of planning implications, and each has economic and political implications as well. The one implemented by the individual library will depend largely upon the decisions taken by the parent institution. And as we are witnessing shrinking budgets and periodic inflations with respect to libraries as an element of overhead often face the first round budget cuts. The library that integrates itself into the organizational life system and consistently demonstrates its value to the parent organization through effective, efficient programs and value addition will be better positioned to withstand budget cuts. So nowadays, to overcome this particular phenomena, there are different types of activities these libraries are considering. Some of the emerging trends like collaborative collection development, just-in-time acquisition of resources, patron-driven acquisition, or forming of consortias or consortiums with the like-minded institutions are some of the emerging trends where the libraries face this budget crunch. Hence, we can say that for an effective financial planning and effective source generation, first you know your organization. First you know your organization, your parent organizations, what activity, what are their objectives, what they want. Know your end users' expectations and changing trends. Implementing very good marketing strategies that establish the special library or research library as a vital component of the parent organization success and ensure organizations cannot lead, the organization cannot lead without this component. So this type of a kind of strategy will really help in getting good budget and proper funding from the parent body of that particular library. With this, I hope you have got some idea about sources of finance and budgeting techniques. Thank you, students.